What's up, everyone? Welcome back to another video. Today I want to talk about trading like an institution. How you can look for institutional orders, how you can look for supply and demand levels based off these certain moves that we're going to be looking for, and how retail traders fail to realize they're trading breakouts wrong, they're trading wrong in general, and how you can take advantage of that as a retail trader yourself. So as retail traders, I mentioned this on my Twitter, we're never going to be able to beat the hedge funds, institutions, never. You know, it's just impossible. They have way more resources, they have way more money. You'll never be able to outsmart, institutions. What it comes down to is, are you able to outsmart your peers? Are you able to outsmart the rest of retail, or at least the person on the other side of the contract, on the flip side, who's selling you a call, right? Who's selling you a put, who's buying it off you, who's selling. You need to just be able to outsmart that person on the other side. And hopefully the strategy, this video is going to help you guys understand that a little bit more and slowly improve your trading, so you guys aren't the ones losing and falling victim to the markets and institutions. So starting off, what I want you guys to see is, this is the S&P 500. This is SPY, the S&P 500 ETF. And what I want you guys to be looking for is sharp moves in the stock, right? What are some moves in the stock that you see only institutions being able to move it that way? Like over here, these candles, right? Something where there's so much buying pressure or selling pressure, you just can't see retailers being able to move the stock price like that. And here's one right here. This insane knife down, this huge knife down, can only be responsible with institutions because of how much volume it requires, how much selling pressure it involves. Retail alone cannot move the S&P 500 this many points in such a short amount of time, right? It just can't. That's what you're looking for. And I'm going to show you guys how you're able to draw these zones, so when it does come into that area once again, so I'll just put it like this so it's easier to see, this zone, you're going to be able to play those institutional orders that were previously sitting there. So when you hear me say orders, institutions, all that, if you're new to this and you haven't been showing up to my YouTube live streams or follow me on Twitter, then you guys are probably not used to this, or you guys are probably clueless on what I'm about to show you guys. Institutions, these algorithms set their limit orders on a stock, right? At certain price points in an overall zone, they set limit orders, right? So say there's 100,000 shares in this zone, where if the stock price moves up to this zone, it will reject back down because it fills those institutional sell orders and then comes back down, right? And then you guys could see, say it only fills like 50K orders here, pulls back up, refills them, pulls back up, refills them, and eventually it breaks through, because every single time it touches the supply zone, it's filling those orders. So how do you know where they're setting these orders? It's fairly simple. You're looking for large moves in the stock where it's practically impossible for retail to make that sort of move. In this case, it would be here, 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 and here. And over here is the example we're using, where we're using it as a supply zone. There are sell orders sitting in this zone, and the way you draw it is here's your candle, you draw your zone from the top of the wick to the bottom of the body of the candle. And then the demand, you do the same thing. You draw it from the bottom of the body, or bottom of the wick, to the top of the body. So you just inverse it. So that's how that's drawn. So you guys can see here, I pull out my rectangle tool, I draw it from here to here, I stretch it across. Draw it from the top to the body of the candle, to the candle close, right? So that's what I do. Now you guys can see, most people, what they tend to do is they tend to do things like this, or they just use the wicks. Yeah, it could work, right? But you have to remember, there are sell orders lined all across this area. So if you draw it out from here, and let me move this because this would have been completely irrelevant, you could see there's still sell orders here. There's sell orders here, here, and here. So you're missing out on one or two good scalps, right? Trying to just trade the top over here. Okay, so when you have the supply zone drawn where you think institutions have their orders, and now when I say institutions, what you're looking for in a supply zone is you're looking for a move like this where it's like this. It's an A shape, right? You want to see such a sharp rejection it resembles an A. And then for supplies or demand zones, you want to see a V-shaped recovery, where the zone is so strong, there's so many orders, it creates a V-shaped recovery, right? Very, very sharp. You want to see huge green candles, high volume, and obviously I have my volume turned off on this. You want to see high volume compared to the rest of those candles. And that's telling you that when it goes over to that area, orders are being filled and then it continues down. So that's what the volume is used for here. I just have turned off right now just because it clogs up the chart for now. So hopefully if you guys are following along, you guys are understanding this. You're looking for those sharp moves, and that's why people really fail to trade supply and demand, is because they'll just draw supply and demand anywhere. You know, someone like, I'll give you guys an example. Someone might even draw their supply and demand like this. Right? How is this a valid supply? It's like a resistance area. Of course, there's some sellers here, but this could just be, you know, small fish, just small funds setting up little sell walls. What you're looking for is the big fish, where it's creating a huge move, so that when it does come into that area, you know how much of a chance it has of rejecting, just because of the sheer amount of volume it had previously to take it down this many points, right? So make sure that's how you guys are looking to draw your zones. So over here, I'll give you guys the example, and I'm in a replay mode right now. Sharp move up here indicates a demand zone here. So I'm going to play it. And this gap down doesn't mean that these orders here got filled. These buy orders got filled. It gapped down before the market even opened. So you guys will see after it came right down to that area, wicked up strongly and moved very high up just from that level, right? So now that you have this drawn, what are we looking for here? We're looking for a resistance or a supply zone. Where do institutions have orders? It moved. Now this is how you guys can tell if it's a strong supply. You have an insane move up, very, very strong, where it seems like it can't stop going up, right? You think it's going to continue going up. Look at this move. This is an insane institutional move. And then it tops off at this random place, 378, and then just completely knives. Comes back to that area, knives right back down, right? What is that telling you here? Pause the video, go into the comments, draw out the timestamp, and tell me, what are you seeing at this level? You're seeing institutional sell orders sitting here. So theoretically, now look, we already touched once, we already touched twice. Theoretically, we touched 3 times. Theoretically, we should reject here, but keep in mind, orders got filled 3 times already at this level. What does that mean? Usually we like playing the second time it touches, right? And that's one thing I also wanted to show is you want to play it the second time it touches, like a fresh zone, because that means the orders are still fresh sitting there. So you would have called this short here at 377, played down to the demand, 374. That's a $3 move on SPY. On the 0DTs, that would be 400%. That's how crazy these go. Okay, so you always want to look to play fresh zones, not ones that have been used. So because look, say there's 1,000 shares, and I'm just throwing that number out here. You fill 500 here, 200 here, 200 here. Right, that's 900 shares. There's only 100 shares left. It could continue back up, right? So when you're playing these supply and demand zones, what you're looking for is very quick and easy rejections off the first retest. That's what you want. You get the zone drawn out. This is your entry. This is your high confidence zone. This is where you size up, because you know, first of all, you already have your stop loss up here. This is the zone where you know the institution orders are still sitting fresh. Right? And look, first time retesting, this is a fresh zone. This is a good area to add, and you guys can see how well these are working. Now look at that. We had a liquidity trap here. Institutional orders were still sitting at this area. Rejected 1 more time, 2 more times. Where did it come back down to? our demand area. And then what is this called when the stock is trading in a range? It's called choppiness. Everyone and their mother hates choppy days. If you guys know how to trade, if you guys are part of the Consistent Crusaders, you guys show up to these classes that I host for you guys know how to trade these. You know how you can capitalize off these moves. Look at how well this worked. Look at how well it's working. All right, obviously your zone gets invalidated here, and then that's it. But you guys see how strong these institutional sell and limit or buy and sell limits are, right? You guys are seeing how these institutions place themselves, how you can identify where an institution's making that move, so you, a retail trader, can see what other retail traders aren't looking for. They're not looking for these large moves. What are they looking for? They're looking for things like this. And this is what the average retailer is looking for. Oh, resistance up here. You know what? I'm going to play the breakout of this. There's a resistance up here. They buy it down here, and then what happens? Boom. They buy these candle wicks, boom. But you, someone who's watched this video, you know these are areas for rejections. You're shorting while they're buying, right? And as they're shorting, you're the one buying. They're shorting this low break. You're the one buying here, right? They're shorting this low that I previously created. They're shorting this level here. You're buying. You're catching these moves, these nice moves, before they're even able to comprehend what's happening. So I know this was a quick little video. I'm going to be going more in depth into this, but this is just a quick video on how you can look at these institutional orders, how to identify them, and draw your supply and demand based off there. Hopefully you guys enjoyed this video. If you have any questions, leave them in the comments. I will answer all of them. Make sure you guys are following the Twitter, DM me there, and hope you guys have a great week of trading ahead. If you guys ever have any questions, feel free to DM me. Make sure to like, comment, and subscribe, and I'll catch you guys in the next one. Peace.